Halifax's newest report shows that the average UK house price in November 2025 is $292, a new record high, yet growth has all but stalled. Compared with October, monthly change is flat, 0%. On a quarterly basis, house prices only rose by 0.4%. Over the year, price growth slowed sharply to just 0.7%, down from 1.9% in October. That slowdown doesn't mean collapse. It means the market is holding steady. According to Halifax, this reflects stability in what has been one of the most balanced years for UK real estate in recent memory. Despite changes earlier this year to stamp duty and uncertainty leading up to the autumn budget, property values have remained surprisingly resilient. What does that mean for buyers, sellers, and renters right now? For existing homeowners expecting big price jumps, November's data will feel disappointing. But for first-time buyers and people renting, it might be a welcome relief. While prices are near record highs, the stagnation reduces the risk of rapid overinflation, and it may give more room to negotiate. Affordability is also improving. Because mortgage costs relative to incomes are now the lowest they've been in several years, Halifax says this is the strongest position for UK buyers since around 2015. That means lower relative monthly repayments compared with many recent years, a potential sweet spot if you're trying to enter the market. Regional differences remain sharp. Some areas, especially parts of Northern England, Scotland, Northern Ireland, and other regions outside the South, continue to see modest price growth, while many parts of the South, including London, show weaker performance or mild declines. That north-south divide suggests that national averages may hide much stronger, or weaker, local realities. Looking ahead, Halifax and many analysts expect modest price growth to continue into 2026, especially if interest rates ease and mortgage borrowing becomes cheaper. But given the weak growth momentum, any future gains will probably be gradual rather than dramatic. So where does that leave you? If you're thinking about buying or renting soon, now might be a decent moment to start house hunting, or at least keeping an eye on market listings. They may offer more stable prices with less risk of sudden inflation. If you're selling, however, don't expect big windfalls. The market is more about stability than surge right now. In short, UK house prices are near record highs, but growth is slowing, affordability is improving, and Halifax's latest data suggests 2025 ends with stability more than boom or bust. In its latest House Price Index, Halifax reports that average UK house prices in November 2025 held steady, with the typical property now costing around 290 or 192 oil nords, effectively flat month on month. Annual growth has slowed sharply to just 0.7%, down from 1.9% in October, the weakest year-on-year increase since March 2024. What does this mean for the housing market? First, the pause in growth suggests the market is catching its breath rather than collapsing. Halifax themselves described 2025 as one of the most stable years for the housing market in the past decade, despite external pressures like changes in stamp duty and speculation around the autumn budget. Second, regional differences are becoming more pronounced. While overall UK averages are flat, certain regions have seen respectable growth. Areas including Northern Ireland, Scotland, and parts of Northern England are showing stronger performance, whereas London and parts of Southern England are showing weaker performance or slight decline. Third, and perhaps most importantly for many potential buyers, affordability appears to be improving. When you compare property prices to average incomes and take into account current mortgage cost levels, conditions are the strongest they've been since around 2015. That means even with prices at near record levels, the burden of borrowing relative to income is lower than it has been recently, which could make house buying more accessible to first-time buyers or those saving for a deposit. This lull in price growth also may offer a breathing space for buyers. With prices stable rather than rising rapidly, there's less risk of being caught by sudden price hikes or overheated bidding wars. On the flip side, sellers may need to temper expectations. Big gains are unlikely in the short term, and realistic pricing combined with good presentation may be what attracts buyers in this environment. Looking ahead, many analysts anticipate a moderate recovery or slow growth in 2026, especially if interest rates begin to ease. Gradual improvements in borrowing conditions, combined with rising demand once budget uncertainty fades, could push price growth back up, but likely in a measured, controlled way rather than a boom. So for anyone thinking of buying, selling, or investing, 2025 looks like a year of cautious balance. Prices are stable, affordability is improving, but momentum is low. If you act now with realistic expectations, you might find some of the best opportunities in recent years. Looking at the bigger picture, Halifax's latest data suggests that the UK housing market has entered a period of relative calm. With the national average price around 299,890 a near record high, but with monthly growth flat and annual growth down to just 0.7%, we are no longer seeing rapid rises. Instead, what we have is stability. For buyers, especially first-time buyers, that stability can be a positive. When prices pause, there's less risk of being caught up in bidding wars or overpaying in a frenzy. With mortgage costs relative to income at their lowest levels in several years, the balance between cost and affordability looks more manageable, even with high property prices. For sellers and property investors, the situation is different. The era of fast double-digit growth may be over for now. The expectation should not be for big windfalls or rapid flips, but rather slow, steady returns over time. That means pricing realistically, marketing well, and being patient. Regional differences continue to matter. Halifax's breakdown shows stronger growth in certain parts of the UK, like Northern Ireland, Scotland, and the North West, while London and parts of the South are seeing weaker demand or stagnation. Buyers and sellers should always consider their local market when making decisions. Looking ahead into 2026, there's potential for modest growth, especially if interest rates fall and borrowing becomes cheaper. Gradual improvements in lending conditions, combined with rising demand once economic uncertainty eases, could push prices up, but likely slowly and steadily, rather than in a boom. So if you're planning to buy a home soon, now could be a sensible time. With stable prices and improved affordability, there's less risk and more opportunity to make a long-term decision. If you're selling or investing, be realistic. Aim for consistency rather than dramatic gains. Ultimately, Halifax's data shows that the UK housing market is not booming, but it is balanced. Buyers and sellers can make rational, informed decisions. And in a world of uncertainty, that balance may be the best foundation for the market right now.